Hello, and welcome to your Daily 5. I'm Greg Harmon, founder and president of Dragonfly Capital Management. At Dragonfly Capital, we manage separate accounts for clients with high net worth assets using a technical approach and an options overlay on top of that. We also sell a newsletter that provides some guidance and some instruction and some ideas about how you might want to trade your own account if that's the thing that you want to do with your time. Today, for your Daily 5, I'll be talking about a subject called waiting from the weekend. And this relates back to the process that I go through every week in creating that newsletter and creating my watch list for what I do for clients in the separate account business. So if you're not familiar with it, every week I run through a Friday afternoon macro market review to identify and confirm the direction of the trend, looking at all sorts of indicators outside of the equity markets. So in addition to looking at the S&P 500 and the NASDAQ and small caps, I look at gold and oil. I look at foreign markets. I look at treasuries. I look at the dollar. I look at volatility. All that to give me an understanding of the direction of the trend. If you're playing in the market recently, you understand that the trend continues to be upward. Lots of discussion in the marketplace about weakness and breadth, but breadth doesn't pay the bills. Price pays the bills, and prices keep going up. So the trend keeps going up, and I keep looking for stocks that are looking to go up. The second part of my analysis is what we're going to get into today. I start looking through my universe of about 1,500 stocks, and from that, create a watch list for the weekend. Pick a top 10 that's going to be the primary focus, but there's generally anywhere between 5 and 30 additional stocks that are on the fringe that just didn't quite make that list as well. So some of those we're going to talk about today as we head into the earnings season, and there's some catalysts that could help put these stocks over the top and into a buy situation. The first one today is Crocs. Crocs, you can see that from the chart here, just over the last 7 months, has gone through a kind of stepwise function, moving higher as it continues to run to all-time highs. As we head into today's trading activity, so this is as of last night's close, this chart, it was bumping right up against resistance after a pullback to its 50-day moving average here to kind of re-energize it, reset the momentum a little bit lower on both the RSI and the MACD, and now moving back up to that level. This level happens to be at about 200% of the retracement of the pandemic drop as well. So it makes kind of sense that there is some resistance here. As we move into today's trading, Crocs is actually breaking out and moving to the upside today. So that's a good one, and one that we can address and probably will address around 3 o'clock this afternoon by putting a position on. What do we expect to see out of this? Well, you can look at a measured move from this drop down to 105, moving up to 117.5. Add that to the drop here, 107.5. So it would say an interim move up to about 120. But we've seen from Crocs that there have been big gaps in here as well. There's a catalyst coming up here on July 28th. It reports earnings. And the indications are that earnings are continuing to rise across the sector, across all retail. The second stock I want to talk about is First Solar. And First Solar here, you see printed a high in January this year, January 25th, with a kind of a blow-off kind of candle here with this long upper shadow. And if we look at the decline from there down to the low, and the actual low, not just in March, but in May, we see now that the stock has retraced 61.8% of that drop. Significantly, it moved above the peak of 50% of that drop and the 200-day moving average that stalled out this stock in April. So as we're moving up here, it's now consolidating in that range, setting up a bit of resistance here. The one thing to watch here is that the momentum is a little bit high, so that any kind of break here could absolutely run up to the prior highs, from 107 to 112 area. But it's quite possible that that move could be fast and then retreat to kind of reset these momentum levels that are getting into the overbought territory. And you can see that on the MACD, the levels that it has pulled back from in the January timeframe. So we're looking for here a move over 94 to get interested in for solar. This one also has a catalyst coming up a little bit later. It's August 4th, it reports earnings. The third name is McDonald's. McDonald's, you can see, had a nice run up out of the pandemic low and continued to a top in October. After just a shallow pullback, eventually found support just over 200 and retraced and reconnected with the 200-day moving average as it moved into the February-March timeframe. Long, flat base, moved up quickly, back up to new highs, and has been in that position for 2.5 months now. McDonald's is attempting to break out today. It's got a candle that actually looks like the one from yesterday with a bit of an upper shadow on it at this point. But you can see here momentum is building both on the RSI and on the MACD. So we're looking for this to move over 237.80, where it had its prior high, and to stay there. Again, 2 weeks from today, July 28th, McDonald's reports their earnings for the quarter, and they also expect it to be pretty good numbers. So what are we looking for if it does move above the 238? Well, some kind of a similar move, say from the center of this base at around 210 to the center of the new base at 230, and about a 20-point move. Look for a move up to the 250 area. The next one did make the top 10 this week and is also trying to break out. Match Group, so Tinder and a bunch of other dating apps, moved up, settled into a consolidation zone here between 130 and 165 for about 6 months, and is now, after a shallow pullback, looking to retest the top end of that range. Momentum is turning back up again. That's a good sign. The MACD has reset a bit lower, so it's got room to move back to the extremes that have been shutting it down when it gets up to the MACD at about 6, where that's happened twice, 3 times, and a fourth time in a lesser way here. So there's some room to get back up above, and same situation sets up here. We've got that 6-7 month channel, a long base, and what's our friend Luis Yamato always says, the bigger the base, the higher into space. The final one, Overstock, is a little bit of a different pattern, but still a nice looking setup. And this one from 2 perspectives. I highlight this rising trend support because of a small gap that we see here back in July. And there were a couple of gaps in this time. And we have seen now lower highs, but in a consolidating type fashion. So even if you don't trust me all the way back here to July of last year, you have to trust me to look at it from August to January to February, back to March, and now the 5th touch at this symmetrical triangle that's been building. We also have, in more recent time, flat horizontal resistance in place that the stock is trying to break above as well. This one is another top 10 position. It is actually pulling back today, so it's not going to trigger today. But we're looking for a move over 97 to get excited here. And from a conservative perspective, then we see about 125 on the top side of the triangle. If we only go back to January, 47 there. So about $80 move. Would expect a move somewhere around up to a price of about 180. So well above new all-time highs. Those are my 5 stocks for today. Thank you for watching.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.